Okay, G. So let's do a quick review on what we have. So far I've been reviewing with the all in the past videos the general the sell and buy model in the worst case scenarios. As you know, when we're counter trending, well, we're expecting for market to reverse. But also we know for a fact before entering the market that we are gonna be against the trend. So once the market is going against us, or once we have a big drawdown or any drawdown that we can measure, in this case that's exactly what we're doing. We're stress testing our margin by using maximal drawdown. That means our worst case scenario based in our initial deposit. So in this case, with sell model will be during 2020, the COVID whole situation when the markets unexpectedly for everyone will know the panorama at the time. But reality is that let me show you the chart for how it unfolded for me, especially when we have very quiet times during January. We could say is this stage of the market. Yeah, let me mark that this will be this stage of the market. We could say something very neutral. This is very good for Algos, really low risk, low gain also, because we're having $60 ranges where price goes up and down. You have some big candles, but mainly in the range of the $30 that at least is the first level that we're expecting, that move of 30-50 pips, sorry, $30 to $50 move in price all of the sudden, like in this candle or all those candles. So here is what happens. Well, here's where the story begins, is when March starts. So everyone is like, okay, this COVID is just temporary, blah blah blah. So once they start, the lockdown was announced, we can see that the price start pushing to the upside. That's the indication that the dollar is, at least not the dollar, but USA in general is, I don't know, we don't know what's going on, you know, like investors are like, what's going on? They're solid, or they're gonna stop operations, because a lockdown is different than having a crisis like in 2008. I'll show you later. That's also part of the model, using 2006, 8 and 11 as part of the worst case scenarios. Actually, let me verify. I think that I'm stress testing, yep, the 2011. I'm stress testing the trend during 2011. That pretty much that's the, I call it exhaustion, or when everything cooled down for the USA after the debt crisis and the house crisis, all the issues that started with it way back then, 06, sorry. And we know that that's the day that everything really, well, the year that everything really went south. So this is the buy model. This is only buy, and it starts 2011 and ends during the end of 2011, beginning of 2020, 2012. And we have, as mentioned in previous videos, we are max stress testing our margin in the worst case scenarios. In this case, this economic crisis, we can 100% sure know how our algorithm and money will act in those type of scenarios. Why this is very important? Because to have that type of scenario like 2011, we had to wait almost 10 years until the lockdown again in COVID. And really, for the buy model, this was slightly safer, we could say. Like, we had this push to the downside. This push is stressing the buy model, but really the drawdown in a $25 move is it's average. It's less than 30%. So in all these scenarios, you're making a lot of money, because as you can see, also the recovery is very, with buy model you can expect all these 50% retracements or recoveries. In this case for buy model I call them recoveries because I will never stop telling everyone gold is real, gold is solid, gold is a metal. So gold will be after us, it was before us, so it's something beyond human capabilities, we could say. And the US dollar at least is something that we can track. We can track this trend and we can know when it might be the downfall, or at least in our cycle of life. I expect everyone lives 100 years, please, but at least in that 100 year span, we could say, let's say 50. We retire early. That's the dream, right? Let's say 50 years. So in 50 years, we could say dollar will still be very, very, very powerful. At least, no, let's say it would not be the number one currency anymore, but we could say it will be still be top three. Like we have as majors the pound, we have the euro, and we have the yen, I think, and the dollar. So top four very solid. And in any case, if dollar falls, it will pull down at least the pound or the euro, because the dollar will be more, unless those are the ones that are pushing the dollar outside. But it's very interesting, like that's the part of the economy that's, as a trader, that we need to be, or that's the reason we're taking these markets as solid for our money, because we trust the economies, we trust that we can track them, we trust that at least it's more solid to have a structure for a country, because literally everyone depends on or relies in the country, than rather, for example, like a company. You know, a company is complex, it's different, and everything can be trusted to only one man, for example. Sorry, but companies can go to zero. They can be a scam like Enron, so there can be also stuff like FTX that we had in. I traded all those cycles, so I know when we can make money, because US dollar is taking hits or it's recovering. Because also something I won't stop mentioning is dollar yields. So, well, not, yeah, dollar yields, but I mean bonds paid yields. Like nowadays my country bonds are between 10% and 11% a year return, so that's almost 100% safe return. So if you prefer to invest in Tesla, or if you like to invest in, for example, companies like Tesla, Apple, Alibaba, whatever you like, also take in mind that bonds of countries are very solid option to keep diversifying your portfolio. I'm not telling you like stocks are wrong. I will never do that. I think that well-diversified portfolios that have a little bit of everything and a good percentage of what you like or what you feel is the strongest asset in your portfolio, well, that's the best option. Like you cannot trust. I trade only Shao USD because I trust the hedge both assets do by themselves, but reality is that my patrimony, or I don't know if that's the correct word in English, but my entire network, my money, I want it to be as safe and diversified as possible. I will explain in future videos how I even with the same, like using gold and dollar, two different type of assets, one real and one not, because we know dollar is not real, that's why it yields, and why gold appreciates or can under appreciate, because we also have the miners. So we need to understand that also as a factor. There's still a lot of gold to be taken out of the surface, but or well, not of the surface, that's the issue, but there's still some gold, but at one point that gold will be all in the surface of the, or circulating in the economy. For now, not. I don't think that's even a possibility, but we need to take every possible scenario so our money is as safe as possible. Like, try to do the homework for your money. That's the best option you can do. So as you can see, that's why I especially track the worst case scenarios for our money. So in this occasion, I'm testing or stress testing 2020 to 2021 for the sell model, and I'll be doing the same thing. I'm gonna start with this range, that is the one that I traded like the exact same day that I started with the I'm stopping on 2023, that is around, let me show you this cycle. So this is 2023, the March, when I'm stopping this stress test, so it's here. So I want to clean as much as possible this range, because really that type of trading plus the sell model, you need to remember this is only buy, so we still need to add the profits of the other model, because they trade at the same time. I'm just testing in different samples, we could say. So the idea will be to get at the best trading possible with this model, and after that I'm gonna verify for overfitting with the worst case scenario that we have here, 2011, the 70%. I wanna get something higher net profit and try not to not raise a lot of the max drawdown, and then I'm gonna compare with the 2011, that is the worst case scenario for the buy model, to make sure that it's not overfitted for the range that I'm testing, because that's the one rookie mistake that everyone makes, is that, for example, you have this Algo, right? I'm in the daily, but if I go, let's go with this one. This is the 4 hour. As you can see, it changes a lot, right? From daily to, this is the same. From daily to 4 hours, it changes a lot. Like the chart, it looks cleaner in daily because we have less price action, we could say, in candles. But in 4 hours we have way more. So, and we have some brokers that also have some crazy candles. Those candles are real, so you need to also backtest with your specific ticks. For example, this IC market, so that was a disgusting candle. But for me, it's something that I count on it, because if price quotes here and goes back to its natural, like the thing that this Forex.com, so we could say this is March 20. So you see there's no candle here, right? You don't see that price. Let's see, 14.99. You don't see that price here, right? Like we see the candle, but we don't see the 99, right? So you need to adjust your EA for those situations. So in that case, if price goes back to its natural, I'll be making money, you know, because my algo managed to open trades here, because it's pre-coded to open trades based in the price, not in indicators or probabilities. So I'll be trading these moves. It already happened to me. I'm gonna show you when. It was in 2023, but this was a move that happened for everyone. But it's very similar, because let me show you. Oh, that candle, as you can see, this is a broker one, but something similar happened that day, and it's quoted. So in every broker that you check December, it will be quoted like this. So every time that happens, it can happen. With my model, you will make money because I'm adjusting, so it can make money in the range, but also it makes more money in the long term, because price will reverse, and it doesn't matter how much it trends, you're making money. So if we try to only optimize for small ranges like this $8, let's say it's an $8, yeah, $8 range. Once price moves, once price is not in my $8 range, that's when either EA won't know what to do, or EA will keep triggering orders and orders, and there is when we have the martingales, that we have 500 lots in our TP account. That's when it happens, because it's not managed, or it's not optimized or fitted to trade every situation. Of course, if I reduce the samples, I can trade this efficiently, make, I don't know, 300-500%. But once the trend catches me, I'll be smoking that account, unless I have let's say risk management. I do it manually, and in the future I will call them to inside the algo. I'll add news filters, time filters, and risk management filters. So for example, something that I feel is very important is to understand that all these candles happen at the same time. Like most of the time will happen during the NYC open or pre-open. Like check this type of news, like the Empire State Manufacturing Index. That's 1 hour before this is the start of the move. You can have one big move pre-London, I mean during London, pre-NYC New York, but reality is during this and 2 hours after it's when market and it's when liquidity enters market, and also we have news. So it doesn't matter what happens, market will move in those sessions. So the idea is model doesn't matter what happens, we'll be able to adapt and to trade any circumstances until price reverses, you know. So let's do this. Let me show you how it's been optimized, and as soon as it's finished we will review it again and I'll present the model.